Money. That's the reason why traders trade. It's the reason why you're watching this video right now. You want to make money. Well, here's the deal. Your edge is worth real money. It's tangible. It's no different than the cash in your pocket. Now, this is a fact. It's not theoretical. Let me show you how an edge works and how it actually can make you money in the markets. Your edge gives you a positive expectancy on every trade you make. The concept is simple. Every time you buy or sell an asset, your edge assures that you have a better than random chance at success. Why? 3 words: risk-reward ratio. Your risk-reward is the amount of money you place in harm's way versus your expected payoff. As long as your per trade risk-reward is greater than 1, you can be profitable with a modest winning percentage. The bottom line, a positive risk-reward is vital to any edge. Think about risk-reward this way. You're looking to buy the US dollar, Canadian dollar in the hopes of rising exchange rates. You're willing to risk $100 to make $200. If the US dollar, Canadian dollar falls to your stop loss, you will lose your $100. If it rises to your profit target, you will make $200. Let's go to the charts and show you exactly how this works. Here's a real-world example. Let's go ahead and buy the US Canadian dollar at the market. Now, using our risk manager, we've already got our 1% dialed in. I know I have to have my take profit at twice where my stop loss is. So my stop loss is at 133.64. My take profit's at 134.24, and I'm buying at market somewhere in the vicinity of 133.84. Now you can see our trade. Now the best part is this trade, your 1 to 2 risk versus reward, has the potential to return you 100% profit. And you only have to win 33% of your trades to break even. Anything above 33% and you're in the money. It's that easy. The idea of making money in the markets can be intimidating. In truth, the formula for consistent profitability is simple. Establish an edge and use it. Apply a positive risk-reward ratio and then outperform your break-even rate. Then you ring the cash register and count your profits. There's no magic or mystery to making money in the markets. Positive risk versus reward, apply it over time, beat your break-even rate. Then you make money.